When you're choosing a parking spot for your cash in a Fidelity account, you've got options like SPAXX, FZFXX, and FCASH. But when we're talking long-term investing, we need to refocus the lens here. SPAXX and FZFXX are both money market funds. SPAXX, the Fidelity Government Money Market Fund, and FCASH, the Fidelity Treasury Money Market Fund. The stashing ground for your cash, if you will. They offer you a smidgen of interest in exchange for keeping your money safe and easily accessible. FCASH, on the other hand, isn't a fund at all. It's the core position that Fidelity uses to hold your uninvested cash. Now, let's not mince words. We're not looking to turn these cash holdings into Bitcoin-level growth overnight. These options are about as exciting as watching paint dry in Portland's rain, but they serve their purpose of keeping your money safe until you decide to leap into a more robust investment. SPAXX holds government securities, and it's as stable as you can get without wrapping your dollars in bubble wrap. It's backed by the full faith and credit of the U.S. government. FZFXX is similar, like a sibling but just with a different haircut. It focuses solely on U.S. Treasury securities. This fund is the financial equivalent of an overly protective parent. It's taking no risks with your cash. FCASH isn't a fund, like I mentioned, but a placeholder. It's basically your cash sitting in a vault, not doing much. It's not likely to earn you much interest at all, less than SPAXX or FZFXX. So, what's the best bet for long-term investing? Honestly, none of the above. If long-term growth is your goal, and you can tolerate some risk, casting your net wider than these secure harbors is key. Look into index funds or ETFs that track the stock market. These are the tools generally used for growing wealth over the long term. They're like the craft breweries of Portland. They can be diverse, innovative, and they've become synonymous with good long-term taste. Remember, money market funds are for short-term liquidity, not long-term growth. They're like putting winter tires on your car, necessary for the season but not something that'll make you go faster. And in the investment world, better returns often require taking on more risk, stepping out into the rain without an umbrella. So take your cash for a walk beyond the money market. Explore your investment landscape just like I explore the greenery around Portland, with an eye for growth and an appetite for a bit more than the ordinary. Keep your emergency fund in something like SPAXX or FZFXX for good measure, but let the rest of your cash play in wider pastures. Just make sure to diversify and stay in line with your risk tolerance. It's the Portland way.